Today we're going over adjusting entries and we're just doing some practice with them because with these types of entries, journal entries, practice is always one of the better things that we're going to do, or it's necessary. And so I have a list of adjusting entries here that we can practice um, and get used to. And I have them organized in the four categories. So if you recall, the first category is deferred expenses. Deferred expenses, whenever we think of something that's deferred, we're thinking of something that's been recorded somewhere already, but it's not in its correct account. And so we have to move it from one place to the next. And so in these examples below, these are going to be examples of deferred expenses. So an expense that was recorded somewhere else other than its usual expense account. Why? Because over time, these expenses will most likely be recorded. So it could be monthly, it could be yearly, but it's going to be something that's most likely sitting as an asset. And now we're moving it from an asset to a expense account. And so, question number one, during the month, $12,000 of office supplies were used for daily operations. What that means is, if we recall office supplies expense, whenever we purchase office supplies, we normally put it to office supplies account, which is an asset account, and it kind of stays there. In proper accounting, we have to account for the office supplies that we use in the period by moving it from that asset account to an expense account. And so the only way to do that, if we recall, I'm just going to put December 31st here because I'm going to assume that we're doing this at the end of the year and the calendar year. I'm going to use the calendar year in these instances. And so if it's saying that we use $1,200 of office supplies, that means that this is an expense that needs to be recorded. We didn't say that we spent any cash. So as a reminder, adjustments normally don't involve us spending cash at that very moment, but it involves us looking at where we put some items when we did spend the cash and moving it from one place to the next. In this case, he would have put something to office supplies. And so now it's telling us that office supplies has too much in it because we used up some of it already. So 1,200 is no longer office supplies. In most instances, whenever we have supplies or things that we put up there as an asset, we're going to debit the expense account. So we can put office supplies expense, a debit of $1,200, and we can credit that same office supplies account that we would have used when we first purchased the item. And if you remember, journal entry means that I have to indent my credit account just so that it's clear. Okay, so question number one, during the month, 1,200 was used for daily operations. That means that 1,200 is not an asset anymore. It should be an expense. So we have to remove it from the asset account by subtracting it, which is why we credit the asset account. And we have to add it to our expense account, which is why we are debiting the expense account for 1,200. The second question says the company has a 3-year insurance policy that begins in January. The annual premium is $2,700. So next, we're talking about something that is again prepaid, or not, well, not again, but it's a prepaid expense, prepaid insurance, most likely is where this would have gone. And so if we pay an annual premium of $2,700, that means that the $2,700 we pay is technically for 12 months. And every month, what should happen is a portion of that 2,700 should be an expense. When we first purchased or paid this amount, we would have put it all to prepaid insurance account, which is an asset account. And so every month we should be reducing it further and further and further, moving it from prepaid insurance to insurance expense. And so with that being said, those are the name of the accounts that I'm going to use. Insurance expense. And then I'm going to be crediting my prepaid insurance account because again, I am reducing the amount of insurance based on the usage over time. And so how do I know what the numbers are here? I know that based on the sentence itself. It says it's a 3-year insurance policy. The annual premium is $2,700. If something is an annual premium, that means it's for a 12-month period. And so in order to figure out what a month's worth of insurance expense should be, technically all I would need to do is I would need to take the 2,700, which is an annual amount, and divide that by 12. And that gives me 225. And so essentially that means that $225 should be recorded as insurance expense every month. And the prepaid insurance balance should be getting smaller and smaller, being reduced by that same $225. And so therefore, my entry is going to be $225. And that would be my entry for the second one. The third one, it says the office computers with a 4-year useful life and no salvage value are being depreciated at $250 per month for 48 months. As we understood from class or from just reading the textbook, whenever we have depreciation expense, it tends to be the same entry. Well, again, depreciation arises when we purchase some bulk items that are useful for more than a year. And so instead of expensing the entire cost of those items, we divide the cost of the items by how long we think it's going to be useful. And every month we are recording depreciation expense for the value that we think is expiring over time. In this case, they say the office computers are useful for 4 years. That's the useful life. And then they just tell us that $250 per month is the amount that it should be depreciated by. In that instance, I can put my calculator away. There's no need to calculate. If they tell us it's per month and we're recording entries for a month, then $250 is all that I am concerned about. So let's go and let's do the entry. Again, depreciation expense. The expenses in these instances are always what is going to be debited. So depreciation expense for $250. And then paired along with depreciation expense is always going to be accumulated depreciation. And I can actually put the item behind. We're talking about computers. So I'm going to put computers for the same 250. And so I can actually put computers here as well. Okay. So 250 debited and credited to those accounts based on that transaction. Let's say they would have asked you to do this for the entire year. Maybe they wait to depreciate an asset for the entire year. The entry here itself would be the same, but instead of calculating a month's worth of depreciation, we would calculate and post a year's worth of depreciation. And so that may mean that instead of just putting 250, we're going to take 250 times 12 months. $3,000 would be what I put here if I was depreciating for the entire year versus in this case, I'm only depreciating for a month. And so that would be how you would consider things like that. Let's do another example. Example number or question number 4. It says $4,000 worth of office stationery was purchased throughout the month for client projects. At the end of the month, $3,200 was left. What that suggests to me is that at the time when we paid $4,000 for office stationery, we saved that to an asset account. And now at the end of the month, we realize some of it has been used and we're left with $3,200 worth. That means that a portion of it should be expensed. We have to adjust the $4,000 that most likely is sitting in the account and make it $3,200. To do that, I'm going to say 4,000 minus 3,200. That's 800. And so therefore, I'm going to reduce my office stationery account by $800 and increase an expense account by that same 800. I can call it office stationery expense. and for 800, and then I can credit office stationery for 800. And so therefore, that would be the entry for the fourth transaction. The fifth transaction says the company's software subscription, the company's software subscription is being amortized over 2 years with a monthly expense of $150. In this case, this is going to be an account that you're not used to, but it's similar to depreciation, whereas you paid for something in full, as well as prepaid expenses, paid for it in full, and we're reducing it and expensing it over time. So again, this is an deferred expense. I'm going to name this expense amortization expense. And the amount that I'm going to reduce it by, they already tell me monthly it's $150. So $150 is my debit to amortization expense. And then I'm most likely going to credit something like software subscription. Just think of the account where you would have put the purchase, the annual subscription purchase. Most likely you would have put something like software or software subscription. Once it matches the scenario, or if they give you a list of accounts, once it fits within the accounts that's given and it makes sense, then your answer should be correct. Next, we can move on to number 6, December 31st. In this instance, they said the company purchased $5,000 worth of inventory, but only $2,000 was used by the end of the month. Now, when it comes to things like inventory, the expense side of inventory tends to be cost of goods sold. It's not inventory expense. That's not normally what it's called. It's called cost of goods sold. And so in that instance, cost of goods sold would be the expense account that we use. And therefore, we would have to identify how much should we actually expense. Well, in this case, I know they gave us two numbers, 5,000 and 2,000, but we do not need to calculate anything because they told us how much has been used. Based on this question given, you are only adjusting the account for what's been used or what's been expired. That's another word that's used. And so because they told us 2,000 has been used, that means 2,000 should be expensed to cost of goods sold. And of course, we're talking about inventory, which is an asset that would be reduced by the same $2,000. On December 31st, it says that $500 of prepaid advertising remains unused at the end of the month and will carry over to the next month's expenses. At the beginning of the year, the balance was $1,500. And so that's telling me that my opening balance was $1,500 and my ending balance, because if something is prepaid, this is going to represent the unused portion, meaning that this is what is still prepaid at the end of the month. Therefore, the balance of $1,500, I have to force it to become $500. The only way to do that is to subtract and take out. So 1,500 minus 500, take out $1,000 from the prepaid account because the balance isn't correct. The balance is at 15 and we have to make it 5. So we have to subtract from that account $1,000 and put that $1,000 to an expense account. Again, shifting from an asset to an expense. And so similarly, with this example here, where we have insurance expense and prepaid insurance, what I'm going to do is just going to copy this down here. It's not insurance, but it's going to be advertising. And so advertising expense and prepaid advertising would be the two accounts that we use. And so we're adjusting it by the 1,000. So 1,000, 1,000. Like I said, as you can see, the situations are slightly different for this question here and this question here involving prepayments, but the adjustment is still the same. The expense is debited, the prepaid account is credited. Just like with these other scenarios, the difference may just be that the name of the account is slightly different or the amounts are different. But what happens is these entries tend to be the same. And so once you get used to completing them for one and reading and understanding the instructions, then you will definitely be able to understand and complete for the rest. And so these are examples of deferred expenses. Like I said, usually involves an asset and an expense account. The expense account is usually debited. The asset account is usually credited to adjust the balance. Sometimes they tell you how much it is. In this case, where they say 250 per month, sometimes they give you an annual amount. If we know something is being recorded monthly and we're trying to define the monthly amount, we just need to divide this amount by 12. And then sometimes they give us instances where they tell us what the balance was. So 1,500, what the balance unused should be. And therefore we subtract to figure out how much the expense should be. And that is the amount that we use within our journal entry.